Salesforce reported earnings and the stock finally broke the downturn channel. Hello everyone, welcome back to the channel. If you're new to my channel, which it says that about 68% of you watching are new and are not subscribed, go and subscribe and smash that like button since it really helps the channel out and it's completely free for you guys. So today we are going to talk about Salesforce stock, ticker symbol CRM. Their excellent earnings yesterday and increased their guidance, so we're going to talk about that. We'll talk about what people are expecting from this stock, and also, even though I don't like to check technical analysis that much for stocks because I don't trade in the short term, Salesforce has a very attractive chart right now. Now, remember I opened a second channel in Spanish, would mean the world to me if you go and subscribe and share the channel. Also have a completely free Discord group chat, which the link for that is down in the description below if you would like to join. Right now, I'm in my sister's backyard since I'm visiting her in Colorado, very far away from home, so that's why the background is different. Let me know in the comment section below what you think about the sound and the background, if everything looks nice, and how's the sound, because if not, I might have to change it for next video, but I think it's nice right now. Let me know. So first, it is not a secret that Salesforce is the leader in their industry and in what they do by far. They are the world's #1 customer relationship management platform, as more than 150,000 companies use Salesforce to grow their business by strengthening customers' relationships. Which might sound dumb, but that is actually very important in a business, because businesses always need to understand what their customers are looking for in their company so they can help them perfectly. So their first quarter revenue of $5.96 billion, up 23% year over year. Quarter one operating cash flow of $3.23 billion, up 74%. Raises full year and second quarter guidance, which we'll talk about that later. In summary, we had the best first quarter in our company's history. We believe our Customer 360 platform is providing the most relevant technology for companies accelerating out of the pandemic, with incredible momentum throughout our core business. We are raising our revenue guidance for the fiscal year. Now, their first quarter was very nice. They reported $5.96 billion, as mentioned before, which subscription and support revenue grew about 21%, and their professional service grew 47%, which, even though it is an excellent growth, it does not represent a huge part of their company's revenue yet. Maybe in the future, but not yet. But take a look at this. Their cost is minimal, as they only spent $1.5 billion to make $5.9 billion. That is a huge gross profit of $4.4 billion. Now, their expenses have increased about 8%, but take into consideration that even though their higher expenses is marketing and sales, since they do a lot of marketing to gain more customers, those are expenses that they could control to be even more profitable if they would want to. They had income from operations of $354 million versus the loss that they had the previous year, 2020. After that, they reported a net income of $496 million. So after their income statement from a traditional earnings calculation, the company seems to be a little bit overvalued, as they have a market cap of over $200 billion. But if we think about that long-term value and long-term potential expansion and growth that this company could have, then it looks very attractive right now. Now, on their balance sheet, they have a huge amount of cash, $8.5 billion in cash and cash equivalents, $6.4 billion in marketable securities, $3.1 billion in accounts receivable, which all of them grew nicely except for the accounts receivable, but nothing to worry about in my opinion. They ended the quarter with total assets of $64.8 billion and $22.3 billion in total liabilities. We do have to take into consideration that they still have a lot of money in goodwill and intangible assets since their Slack acquisition. They have total goodwill and intangible assets of $30 billion. So if we subtract that from their total assets, they would have actually a $34 billion of total tangible assets only. Also, only have a non-current debt of $2.6 billion, which is insignificant in my opinion, and stayed almost flat year over year, so that does not worry me at all. Now, on their cash flow statement, we can see that their net cash from operating activities had a nice growth, because even though they only had $469 million in net income after accounts receivable and all that. They ended the quarter with $3.2 billion in net cash from operations, which means that the company is very healthy right now. They did invest money as they reported a negative $1 billion in net cash used in investing activities. Something investors liked a lot was their guidance, as they raised it for the next quarter and the whole year. They are expecting a revenue of between $6.22 and $6.23 billion for quarter 2 and $25.9 to $26 billion for 2021. This is a nice growth of between 21 to 22% year over year. I would think that that was what made the stock break the downturn channel, as they have had nice growth since their Slack acquisition, but still the stock has been dropping since then. So let's take a look at their chart. As you can see, it started dropping during September 2020, and even though the stock has tried to bounce back once and once again every single month, it has always gone back down again. So in order to see it going back up, we needed it to break up this channel, close and stay away from it. And that is what happened yesterday after the earnings. As you can see, this huge gap here, it's because today it opened at $237 per share, which is a nice price as well, because $237.33 was actually another support from months ago, so seeing it crossing that is really nice. Still, we need the stock to stay up there with strength to maybe continue seeing an uptrend in this stock and not going back down. So I think we might be seeing a nice uptrend opportunity here. Now, remember, I always tell you guys I don't like to time the market and never know what is really going to happen tomorrow. I'm saying this because if the stock goes down, I don't want to see anyone saying that I said it was going to go up tomorrow, because I'm no financial advisor. As I always tell you, you should do your due diligence before investing and invest in the long term. Now, Salesforce is a great company because they are the leading customer relationship management company. Acquisitions such as Slack has actually been offering a nice growth for their business that they might have paid a lot of money for Slack, maybe, but we need to see how this could help them in the long term. They have a nice and healthy balance sheet as well, and the growth has been nice. Now, there are always risks with companies, and Salesforce is no exception, obviously. Even though acquisitions have been great for their growth, focusing too much in that could negatively impact their balance sheet, since, as you could see, their goodwill was pretty high and could get higher if they continue buying companies. Obviously, there is also competition with Microsoft, Oracle, and many more companies, but I think that if they continue expanding and improving their business, they could easily continue being the leader in the industry, so that's not something to worry of. Now, let's talk about something important. Salesforce is trading at $241.06 per share and has a market cap of $222.5 billion, a high PE ratio of 50.87, and a price to sales ratio of 9.96, which actually is not that bad. And even though they have been seeing a nice growth, and analysts are expecting a growth of between 18 to 21% year over year, and even though that is an excellent growth, I would like it to be higher in the coming years, as the FANG of Facebook, Apple, Amazon, Netflix, and Google, and Microsoft are already having that kind of growth year over year, or even better. I'm not talking about the stock, I'm talking about their company's revenue growth. Now, analysts are also expecting the stock to go as low as $200 or as high as $336 per share, which is a very wide gap. That's why I don't recommend looking at this right now. I do believe the stock could get above $300, but would really like to see their growth to be higher a little bit more in the long term. Now, what are your thoughts on these companies? Are you investing in it, or do not like the company nor the industry? I do have to say that they have potential by being the number one on the industry and could give investors a nice return, but do have to be very careful with future acquisitions, because they would spend a lot of cash in it and goodwill could go higher, so the balance sheet would not be that healthy anymore. Hope you enjoyed the video. Please smash the like button and subscribe, since it really helps the channel out. Remember about the second channel in Spanish and the Discord group chat, which the link for that is down in the description below, and it would mean the world to me if you go get in the group and talk a lot with all of us in there. Thank you, and see you next time.